We are going to get started with this panel, which I think these two gentlemen needed a little bit of optimism. So they invited me last minute to come sit on this. Two good friends of mine and always great people to throw some ideas off of and also follow online. Christian Elferink of Soar Financial and Antonio Atanasov from Resource Talks. And this is a panel discussion called Red Flags, How to Spot Them Early. And again, I was asked to come on late last minute and will hopefully provide some moderation. I was told this would not be in Dutch, so, but hopefully they keep it that way.
We zullen proberen niet in Nederlands te doen.
Kunnen we altijd doen.
Thanks, Trevor. We'll try to make this a bit more engaging. So if you guys have any questions, please raise your hand and I'll ask you some questions. We're talking about red flags and not the two red flags on the stage. Who here is investing in junior mining stocks? Raise your hand, please. Everybody, good. Who here has lost money because you ignored red flags or missed red flags? Do you want to give us an example? Don't have to, but you don't have to name names. But what did you miss? What red flags did you miss?
Yeah, probably the silver top in 2011, and there were flags there. People were saying this is going to come down.
Okay.
That was maybe the time to sell certain stocks, and well, it hurt, put it that way. Huh?
But not any company-specific red flags you want to share?
Company, well, I think anybody in the silver collapsed from 49 right down. Anybody in any, you name any silver company you want, and it dropped to 70, 80% if you know.
Fair enough.
Yeah.
Anybody?
Listening to that accent, I wish he was doing the whole presentation.
Anybody else who wants to share an example of red flags they missed? Nope. I guess you can start with your slides now, Antonio.
Sure. I'm going to preface this by saying that, first of all, I don't know what I'm doing. So I've only been doing this for a couple of years. I've got ideas. I've been asked to share some of those ideas here. But if you find that I'm out of line or missing something or saying something wrong, please just put up your hand. Let me know what I'm doing wrong, because there's definitely going to be mistakes in there. And second thing is, I don't actually believe in red flags as in showstoppers. I believe they're more like yellow flag or orange flags for some reason. And that means just look closer. It doesn't mean stop looking. If, you know, okay, we've got 7 groups here, but if a company's got one of those things and you stop looking, no, I don't believe that's the case. There's been a lot of successful companies. I think every company has at least a couple of red flags. There's been a lot of very successful companies with multiple red flags. And so it just means ask questions, pay attention to this, because it may be a grift. So that's what the MAG 7 stands for. It's 7 groups, 7 groups of red flags essentially. And if you've got a lot of those, it may be a grift with the emphasis being on. Maybe first thing we're going to start with is management. So who's running the show? That's I don't know if that's the first thing you want to start with. I guess it depends on your background as well. If you're a geologist, you might start with geology, and we'll get to the geology as well. But who runs the show here is one of the most important part. There's a couple of bullet points that we wrote down. I don't think we'll run through all of them one by one. I think one of my biggest issues is when I look at not only management, but also board. So the board of directors, who's taking the decisions here, and I want to have at least one senior technical person on there. So if there's no technical people on there, again, I'm going to be asking questions. Why not? What happens if you don't have any technical people on the board? What happens if there's a disagreement? So of course you've got a technical advisor or whatnot. They bring up an idea. The board's like, oh, we cannot promote that, so we're not going to do that. But maybe that is the best decision for the company because it is rocks that we're dealing with here. So that's my one thing. I think Christian, you had something in here as well that you want to say.
Yeah. I want to allude to the last point. I think it's good to have an all-round team, not just have geologists, not just have finance guys, but to have one finance guy who can bring in the money and one geology guy who cares about the geology. Because I think there are several examples of companies where it's just finance guys that it didn't work out, or it's just geology guys where it didn't work out. Trevor, do you have any strong opinions on this?
I have a little bit of an issue with your first one.
There's a whole pattern.
Listen, I think when we work in capital markets, when we work in the capitalist system, people should be allowed to test and challenge themselves and try to create something and either become successful with the risk or fail trying. Now, if you are a young geologist that maybe has just worked in projects and you're giving an opportunity to take on something new, and maybe it's something you've known before, you don't make much money, but this is a system that junior mining has created where you have to go to the markets, you have to provide, a market structure, capital structure. You should be allowed and given some sort of confidence to at least try. Now, does that young geologist turned CEO have a record of value creation? Maybe not. Should he be allowed to go try something and take a stab at it? 100% he should.
I think you bring up a good point. If I would go back, I'd change the first point to a track record of value destruction. So that's
completely different.
Yeah, completely different. You bring up a good point. No, you're right. I agree with that.
But that's where the all-round team comes in, right?
Yeah.
Yeah, for sure. But the CEO, the management team, he or she, they're going to carry the company and be the face of it, and that's at the end of the day, everything goes on them.
Yeah. No, you're right. I agree with that.
Yeah. What's your question?
We'll get to that. That's the second
we'll
point.
get to that. For sure.
Yep. We're missing a lot of important points, and that's why there's 7 in here.
Hold on. Anybody else? Any questions? Or yeah.
I just want to clarify, because it depends on what type of company you're talking about, because I fully agree with you. But obviously, if you turn around and said, right, okay, for a larger company that's more developed, you would expect, there's an expectation it's a more experienced team. But if it's a startup or something like that, then are you talking?
I think we're mostly talking about junior mining.
Yeah.
Yeah. Really junior.
Non-revenue generating companies
Yeah,
for sure.
yeah,
Small market
yeah,
caps.
yeah.
Yeah.
What's revenue?
Yeah. That's not something we do. Incentives. Who does management really work for? A couple of things that are on here. Again, I think all important points really. I guess once you start, I think yours is essentially the most important thing.
I've been a critic of founder shares for a long period of time now. And the first point is out of whack founder shares. I'm not against founder shares. I think founders should have a certain amount of shares for the work they've put in, if they put any work in. But there are a few examples I want to highlight. Can you go to the next slide? Where management awards themselves basically free shares before they even go to market. So in this case, it's 2 different companies, same management teams that set up 2 companies, and they issue themselves 31 million shares against, how do we pronounce this?
1
A
millionth
millionth?
of a penny? I don't know.
So they paid $3.11 for 31 million shares. And I'm not sure about the numbers when they went to market, but there will probably be around like 60 million shares at 20 cents. So you can imagine the return they made just by going public. And then the second example is the same management team. So they did it again. They did it 3 times actually, but I couldn't find the third example, unfortunately. So in this case, management is definitely not aligned with shareholders. And you can find this on CDAR. Who uses CDAR? Show hands. Everybody should put up their hands, so please start using CDAR.
Not on the weekends, because it never works.
It doesn't work on the weekends. You can find this in the filing statements or in the prospectus. So please start using CDAR.
Yeah. My point here would be, again, alignment. I think that this is the most important concept, probably in life, but I feel like my beard is not long enough to get philosophical here, but definitely in finance. Incentive is the most important concept in finance. Your counterparty, what's pushing them forward? Is it, if they have a royalty in the project, are they working for the equity? Are they working to make your portfolio go up, or are they working to make money on the royalty? If they have an out of whack change of control clause in there that pays them, a couple of $1 million for just selling the company without a specified value amount or anything like that, then are they really aligned with you? Probably not. But all of these points, they do check out. So I just want to say this is the most important part. What I do in interviews is I would ask CEOs, how much of your own money have you put into this company? So don't tell me how many shares you own, how much of your own money have you invested in this company? How significant is that to you? Because someone can tell me, I've put $1 million in it, and that's multiples of my net worth. But for them, it could be, low double-digit percentage of their net worth. So how aligned would they be? Like if I put 20% of my portfolio and they only have 0.001% of their portfolio in there. So average price paid for the shares, what's really driving them, how much of their own money, what do they really have at stake? Jokingly, I asked them, if this goes wrong, are you going to sleep in your own bed or in the doghouse? And there's another funny question that there's a geologist, Mark Bennett, gave it to me, and he said, you should ask them if they would mortgage their house to drill the project. And that's, of course, putting it jokingly, but it does show the way they respond to these questions is almost more important than what they answer. So it does show incentive. Guess that's about it. What do you want to add, Trevor?
No, I think I agree with a lot of them. I'd take 3, the insider buying for more than 12 months, a little bit with a grain of salt. Just kind of depending on what their blackout period is or what's going on with the company might have something to do with that. And then why, what if the company's actually had a nice move up higher, and continues to add value? Would you still expect the management to be buying at those higher valuations?
Yeah, at least a little bit.
A little bit?
Yeah.
That makes sense. I mean, I don't think I'd be like heartbroken. If I was an investor and I had like a 200% return, would I be buying more at 200% return? Why would I? Do I expect them to be buying more to?
Well, why would I buy your stock if you're not buying it?
100%. No, I totally agree. I think it's just the you got the blackout period in 12 months. You kind of got to understand why they're not buying. Like if there's a reason, if they're blacked out or something.
Anybody from the audience, any questions, wants to add? Yes.
One question also, why is this company at all in existence? When there's a start of a bull run, all sorts of people claim they want to.
It's a good question. I think we can all agree that there are too many exploration companies.
Yeah.
And it's a question you should always ask, for sure. Yeah.
I ask myself that question every night when I wake up at 3 o'clock. Why am I even here?
You should ask the bankers.
We saw that. Number 3, geology. I thought about putting this first in the hopes that the majority of you would leave, because I know most people don't care about the rocks, and I think too few people care about the rocks, and you should. A lot of people just stop at grade. It's high grade, great. I don't agree with that. There's a couple of things. I'll just pick one, which is too deep, too narrow. I should have thrown the other one in there, so no grade continuity. When I see grade, that's awesome. I want grade continuity. Maybe they don't know much about it yet, but then I look at, is it too deep? Is it too narrow? You drilled 200 grams of gold, great. Is it over half a meter? I might have comments on that. Is it, 2.5 kilometers deep? When the mineralization starts, I might have comments about that. There's too much really that I can say about that on here. That's something that I do focus in interviews as well. I typically ask technical people to join us, and I do go deeper on the geology. I might actually turn this around and say that it's a red flag for yourself and your own portfolio if you don't know or understand or care about geology in the first place. I think you should absolutely read the technical reports, and you should care about this, and you should, again, ask questions. You don't have to be a geologist, but you should ask questions and try to talk to the management team, and specifically the technical guys on there. And it also, again, it matters how they tell you and how they explain things almost as much as it matters what they tell you. So again, ask questions and see if they can explain it properly. So I think there's a question.
Because you have some poisons in it and so on. And so
Metallurgy, 100%.
This is another big point, I guess, we should mention, especially if you look at the ESG criteria.
100%. So the gentleman over here is talking about metallurgy, essentially. So either, obviously, bad metallurgy, not good, obviously. But maybe it's untested. So a lot of the companies would just wait for far too long to do metallurgy. They're like, oh, we'll do metallurgy when we get to the MRE stage or whatever. I don't like that. I want at least something preliminary. I want to know at least, you know, a full assay table. I want to see arsenic, bismuth, mercury. I want to look for these things. So it's a very good point to look for the metallurgy. Yeah. Christian?
Yeah, then I want to touch on the recycle project. Like the mining industry is really good at recycling, but just recycling projects. So we've seen a lot of projects come back when the bull market starts, with new management teams, with new stories, trying to do something different, and that mostly doesn't work out. So try to look for that. And again, you can do that on CEDAR, go through tech reports, and try to look out for that. Like it might work, but more often it doesn't work.
But sometimes it does.
That's what I'm saying.
Dixie.
That's what I'm saying.
I mean, look at Great Bear. They were the
great example.
They were the third team on Dixie over 20 years,
Great example, for sure.
and they just took a different look. They took a different approach, and then they found LP, and boom, it's gone. I mean, with like collective mining, Guayabalas project, you know, I've known people that had that project before, and now collectives unlocking it, and so. You know, recycle projects is one thing. If they're going about it the same way the last operators, the last explorers did, sure, red flag. If they're looking at it at a different way, I mean, yeah, maybe give it an opportunity to see what plays out, because obviously the rocks they're not going anywhere. The approach to get to the rocks is what can make or break the project.
I'll take the middle on that and say that again, not a red flag where, oh, this project, they've tried it before, so don't touch it. No, ask. What went wrong the last time? What are you doing differently?
Just be aware of it.
Yeah, exactly. Be aware, ask questions.
Yeah, sorry, we'll do Pete first. Yeah, Pete.
Maybe not really a question, but I don't think many here are geologists, so it's very hard, this part of the business. But for me, an easy filter is if they bring core to the meetings here.
Right.
Like, I think one is bringing it here. They're showing it off, so it's positive. They want the signal, they're open to it. It's something, a selling point.
Right.
Or they bring the geologist, which is not the CEO. So I think there are 2 or 3 companies where we brought the geologist just to explain it. And many of these red flags, if they're not explaining it to you, then you should ask about it. But if they're already starting about it, then it's obvious, probably not a red flag. So
Yeah, no, fair enough.
one of the filters we can use, but
No, fair enough, yeah.
another question.
Just on that statement, I would also be hesitant on that. I think visual assays, as you can kind of call them,
Yeah.
can be a scary thing too.
Yeah, no, for sure.
Yeah.
Good point. Good point. Yeah.
3 pieces of core bring on a display
Yeah.
that look beautiful. But when you try and put that into context of a resource,
I think a good example is a certain company.
Or when they have a huge hit and don't bring the core from the huge hit, they bring something else. I've seen that before. It was like,
too valuable to be.
yeah.
I'll keep it moving here. Jurisdiction. This is an easier part to understand, I guess. I've only done 2 site visits in my life and just did them, so this is something I'm starting to think more and more about. And these things are they're all kind of obvious, I guess. I think infrastructure, power, roads, water, rail, stuff like that. That would just be my call, but it's also self-explanatory. I don't really have anything too much to add here, Christian.
I think this is pretty obvious. Does anybody have anything to add or question about this?
Yeah.
I think Rick Rule doesn't agree with you. He's pretty attracted by jurisdictions like DRC, as long as they are promising.
Yeah.
Well, it depends on which part of the DRC.
That's a fair point first. So that's a fair point too. And it's certain parts of the DRC don't have many of these red flags. They may have some of these challenges, but they don't have these red flags. All of this comes down to...
They could have the red flags, but if you're comfortable taking the risk, you can definitely make money.
Yeah, go talk to an Alphaman Resources investor and see how they felt a month and a half ago.
Yeah.
I was one of them.
Yes, sir.
Also a red flag when they have hired some sort of consultancy company that is consulting many other companies to make their decks more smooth and that everything looks too good to be true.
Yes, and that's going to be in our 5th point. Are they spending? 5th point's about spending. what are they really spending the money on? I think where you see that is if in some of these ratios. So when I start off a company interview, before I get into the interview, I do a kind of a financial overview, and there's a couple of ratios I look at. One kind of obvious, I call it the exploration to administration ratio. It's how much money is going into the ground versus how much money is going toward G&E, non in the ground activities, if you will. But then you go further beyond that. They have notes in the financials that have breakdowns that are going to show you the technical, so the geology spend or the project spend, what is it going toward? Now, a lot of companies, or some companies, let's call it some, I don't know if it's a lot, it is a lot. They capitalize their exploration expenses, so it would show up in the balance sheet, and then there's going to be a note, typically note 4, could be note 9. You go down to note 4, you're going to have a breakdown of what the project money was spent on. There could be a lot of consultancy money or a lot of consultancy spend registered as geology consultancy. Not a red flag. You should just ask, because sometimes it's not really geology, but it could go in there. So first thing, exploration to administration. A second thing is drilling to marketing ratio. So specifically drilling and assays, I take that cost out of the exploration spend, divided by specifically the marketing and IR spend. And yes, you can see that typically in there whenever they have, whenever those ratios are out of whack, that's when you can see it, and it can be a red flag. So, sir.
Sometimes it can actually make sense to first have G&A to build valuation before fundraising to build value.
It depends on what's happened before. If it's a brand new project, I don't know, because if you are building value, if you're spending money on marketing, what are you advertising if you've not built the project before? Ideally, I actually like companies staying private for a little while, building at least some sort of a base.
That's exactly where I was going to go with it. If you're building a company and you haven't drilled anything, I would prefer companies stay private as long as possible, even if they are drilling. Like a great example, I was an early investor in the Scout discoveries in Idaho. They remain private. They haven't drilled a single thing, but they have all this momentum because of the jurisdiction where their major project, what's it called? Cuddy Mountain is located outside Hercules Silver, or Hercules Metals now. They're out there doing a lot of travel, communicating a lot, basically doing a lot of marketing, I would say, but they have a lot of money in the background that's supporting them to do it. They're going to probably drill this thing this year as a private company, it sounds like, and then come to the market. Yeah. That's the least. At least that's the last word I got. But so I'm all about staying private as long as you can before you actually start putting stuff together with the drill bit.
I
think, Christian, your last point might answer the first gentleman's
Yes.
question in there as well.
If I understand your question correctly, like there are a few companies out there, they're not a lot, where the CEO has his own exploration company, where he does his own exploration work with his own company on his own project. So you always have to be aware of that, and you can find that back on CEDAR. So it's basically recycling the money within his own company.
Yeah, and I would say
that it's not always a red flag.
Yeah,
I think you have a good example of that.
I would say unexplained. That's why. So I put that in there last minute. Unexplained. Yeah. So it has to be explained. They could have a drilling company, but again, you have to ask, and it has to be explained. So sometimes they get better rates. Ridgeline.
And Scout.
And Scout.
Yep.
Chad Peters got his own drill company. He gets better rates from his own company than he would elsewhere because he knows the local market and it's very specialized. Sometimes it could be a red flag, and it's all sorts of services. That's another question that I ask is, first of all, do you have other jobs? Are you running other public companies? But also, are you running private companies that might be delivering services? Not an instant red flag, but explain to me why your company is better than the next guy's company. That ties into that as well, I think. So keep it moving. You only have a couple of minutes here. Structure. I wish Luc Den Have was here with us for this one. What's under the hood of the stock itself? He would probably put this way up top. He would put it at 0, not 1. So this is a couple of those in here that are important. I put massive share count first in there, and then I added the CAGR, because I think not always a red flag if you have too many shares outstanding or whatever. I mean, look at Australia; it's always given as an example. But how quickly that share count has grown and what value has been built for issuing those shares, I think that's something that has to be looked at. Christian, yours is the second point, I believe.
Immediate red flag, immediate pass for me is if there are more than 30% warrants outstanding. It's almost impossible to overcome that without an actual discovery, get over that warrant overhang. So that's almost immediate red flag pass for me.
I think.
And always, sorry, yeah.
No, go ahead.
Always keep an eye on the 4-month holding period when it comes off. Because when there's a warrant included, you will most always see selling. So keep that in mind. Ask the company about when the hold is due.
Yeah, it seems like a very. I think it's a Canadian thing where like it's warrant clipping essentially. So people would hold the warrant. Would hold the warrant. They would sell the shares.
Yeah.
Which is something that I just don't understand and wouldn't happen. Yeah. I mean, anyways, yeah. Go ahead.
Why? Oh, sorry. That's exactly what I was going to ask. Like. Yeah, I want to piggyback on that. I don't know what they mean. What they mean with the bullet point of too many shareholders in too many parts of the world. That sounds like liquidity.
Time zones.
So what?
Too many time zones. So and that's something that this comes actually direct from CEOs. Managing or being able to explain everything well enough for 16 or 18 hours a day could be a challenge. That's why double listings are so challenging to pull off too. It's the time zone thing. And it's also oftentimes coupled with a lot of the previous red flags that we went through, which is more marketing spend, a lot of unexplained stuff because you have to do more in different jurisdictions. It's further travel and whatnot. So generally, if you're Canada and you do Canada, Europe, that's fine. If you try to do everything in between, again, it could be a red flag, not necessarily a red flag.
So
let's table this, guys. We have
sorry.
1 minute.
1 minute.
I completely disagree.
He's saving me.
Yeah.
He's just saving me. That's it.
You're wrong.
Transparency. Are they telling you there's 1 minute, literally? But are they telling you the full truth, the whole truth, and only the truth, or whatever they say?
Nothing but.
Yeah, nothing but the truth. What do you say? What do you have here, Christian?
I keep rehashing CEDAR. People try to use CEDAR if you want to be a more successful junior mining investor and want to avoid the red flags we just summed up for you. That's where, like a company, I'm not sure where I'm going with this.
News releases
CEDAR.
only on CEDAR. So if the company doesn't distribute through news wires, whatever they might be, but they only publish the news release on CEDAR Plus, they might be hiding something. They don't. It's not necessarily true, but they might be. So I think that's where you were going with this.
Yes, sorry.
Yeah. Yeah. I mean,
One question? Yeah.
So maybe I was underspending, but it's, did you mention their cash position? Because these things are burning matches. If they don't have
Yeah.
cash, you could see they're going to run out. I mean, you know, and maybe it was, I thought there would be a different.
we only have 7 points.
You know, because everybody who gave a presentation said, here's our cash position. This means we can finish this, we can finish that. And you could see that. But I'm not sure if that came in here, because if we've got a clear cash position, then that's a red flag.
No, good point.
It's a non-starter, really. It's more than a red flag, unless, again, I suppose they can explain to you how they're going to fix it. So.
Insufficient cash to be able to meet their drilling targets and so on at
Yeah.
the same time.
Yeah. Exactly. Yep.
Last question.
It's a general question, or maybe at the end of you want. All right. You already finished the 7, right?
Yes.
Yeah.
Coming back, so we can do some general questions.
Sure.
I knew this. I've been starting to invest only 1 year ago. And I was thinking about what you just said. Why this company are not private? At least the Explorer, what I saw till now, they don't need much money. Maybe $10, $20 million.
That's a
That's a
whole lot of
lot.
money in
That's
this
a lot.
industry. Yeah.
It's already a lot.
Yeah.
All the other industry would use institutional money, like private equity.
Sure.
Things like that. There are no other
consultancy for 15 years, so I saw many industries. This is probably the industry with the most asymmetric information around. I mean, for a person, even for geologists, the information that the owner has is much more than because he has information that not asymmetric. It's not like other industries. It's very, very difficult to understand.
It is a challenging industry to jump into. I've been in it for 8 years.
Steep learning curve.
Steep learning curve.
It's almost like a public choice in economics.
Right.
I think
You spend so much time to understand a company, even if you are good enough to understand, that probably it's not worthwhile. So I wonder why you went to Europe in this way. The company, ridiculous, like $3-4 million market cap are listed. And I wonder if it's just because they're looking for suckers. I mean, the only reason
You're catching on really quick.
people like me shouldn't invest. No, I'm absolutely serious. People like me should not invest. I mean, when you need money, okay, you have a portfolio of copper, you need $1 million. That's the perfect moment to go to the market, right? Because you don't find, even it's difficult to find $1 million even from institutions. But if you need $6 million, I mean, why do you need to?
Listen, I know we're short of time, but this for us, like retail people, can be incredibly life-changing financially. This is the venture capital that we're not able to participate in coming out of like Silicon Valley, where those VC programs are able to, bring in these small companies with an idea, provide them capital, help them build, and if it doesn't work, they cut them off. It keeps building. They keep funding them. We don't have access to that because of institutional investment rules or anything like that. But we can take ideas from a $5 million market cap junior explorer who's got an idea, takes a project, drills a discovery, there's a double or triple, they build it into a mine, and there's potentially 1,000 bagger that we never would have had an opportunity to get in the first place.
But you're
if
right.
it wasn't for these markets.
Most companies shouldn't be listed.
most companies shouldn't be listed, and most people shouldn't be in junior mining.
Yeah.
It's like buying a lottery ticket. If you get the lottery ticket, you get a few
Yeah.
It doesn't happen all that often, you're right. And most companies should be, in my opinion, private, and most people should not be in junior mining in the first place. So you're absolutely right.
We have to cut this off. Sorry, guys. We can
We're out
discuss
of
this
time.
outside. We're out of time, sorry.
Let's bring this outside.
Are you moderating? Yeah?
No.